in advance. Um, I don't know why it is, but every year it seems like when this seminar comes around, then I tend to get sick, and I thought I was in the clear until this weekend. So I've got a little bit of a cough and I'm trying to deal with it. I apologize. I will try not to cough into the microphone, but just a warning. So thank you very much for attending. We are going to go over, let me go to their this is what we want to cover today. We're going to go over some things really quick on some just some the things that change typically for the adjustments for inflation. Not as major as it was the year before, but we're just going to look at those real quick. Then we're going to go over some of the program enhancements, a few things that have changed, and we're going to go over some new uh, law changes. And luckily, there's not a whole lot of them this year. It's pretty minor change for tax year with it goes. One of those is the clean vehicle credit. We're going to talk about that for a little bit. The IRS has an option this year for the those duplicate dependent returns, the ones that reject because somebody else already claimed that dependent. Then we're going to talk about the 1099K just a little bit. Every year there seems to be a threat of that, and we're going to have this tons of 1099Ks that we have to deal with, and it just hasn't happened yet. I don't know if it's going to be this year or not. We'll find out, but we'll talk about that for a little bit. And then it's not really new, the 1040X on the Efile, but I want to go over that. And we're going to talk about a few things on that. And then after we finish with that, then we are going to go into just kind of an overview of doing a tax return. So for those that have been with us for years and years, um, I will not be offended if you tune out during the overview of preparing a tax return, but but we will be going over that. So let's get into this. So the here's the tables that I kind of put together of last year to this year. This 2024, 2023, and 2022. You see there was how they go, the standard deduction amounts. They increase every year based on inflation. From 2022 to 2023 was a pretty big jump. I think it was what was it, almost 7% jump on that. This year it's about 5.5% what it jumped up. But these are our new standard deduction amounts for single head household, married filing separate, married filing joint. The the amount of the additional amount of the if they're over 65 or blind, those went up by a little bit, $50 each. Um, and then the standard deduction amount for the dependent, those also went up. The qualifying relative income limit. This used to be This used to be what would be the exemption amount if we got a dollar amount for exemptions, but this is the qualifying relative income amount. So if somebody makes over $5,050, then they may no longer qualify as a dependent unless they're a student or something like that. So those are some of the changes there. Nothing drastic. The uh, the tax tables changed, of course, a little bit. You know, where it moves from the 10% up to the 12, up to the 24, and so on. So now, you know, we've got a little bit more money that'll stay in the 10% tax bracket, but again, not drastic changes. The business standard mileage rate went from 65.5 cents up to 67 cents, which is really, here's interesting. It doesn't make sense to me. You use the same car to use your car for business, but if you have to go to the doctors or the hospital, for some reason it costs you 1 cent less to drive on the medical. But those are the numbers, and nothing changes for the charitable miles. The IRA contribution limits went up a little bit, so 7,000 and 8,000 if you're over 50. Let's see. The earned income credit limit. So if somebody has 3 kids, then they can make up to $66,819, whereas before they would have been phased out at 63,000. So that went up a little bit. The maximum amount of the credit. that somebody can get for the year is going to be $7,800 if they have 3 kids and they hit that magic number right in the middle of the tables where they could get up to $7,800. No change in the child tax credit for the child tax credit amount, but the refundable portion of it. So if they don't need it to offset tax, then they could get a refundable part of the child tax credit. So that actually went from $1,600 up to $1,700. So if somebody doesn't have any tax, or they don't need they don't have any tax, they still may be able to get the refundable part of it could be up to $1,700. As far as the education credits, the amount of the dollar amount of the education credits, those didn't change. And then also the education credit phase outs, they didn't change. So the same dollar amounts, and that's been for years that it seems to have been the same thing. It seems like I didn't used to have a lot of people that phased out of the education credits, and now it seems to be a fairly common thing where, I get all excited thinking that we're going to be able to reduce their tax or increase their refund because of the American Opportunity Credit. And then it turns out that, their income went up and they phased out of it and they no longer qualify, or they just get a smaller amount or limited amount. Anyway, those didn't change. So as everybody else's income went up, they didn't make any adjustments for the phase outs in that education credit. Same thing with the child tax credit phase outs. Same dollar amounts as far as if they do phase out. Luckily, those are pretty high. Okay, let's the qualified business income. So this is the qualified business income if you have a specified, lost the name of it, service business. Then they may be limited based on the income. So that went up from 364 up to 383 for married, and went up for single as well. Um, if they have the excess business loss limitation, so if you have a client that has a large loss on the business on a Schedule C or something, that went up where it used to be limited to $578. Now it's limited to 610,000 and 305 for married, single, or head of household. So those are pretty much the notable things on the adjustments for inflation. Not everything, and nor do you want me to go through everything on those, but no big changes on those. Typical changes is what we see on those. Some of the things that we changed in the program, we added a few things in the program. First one on this list here is we added the SPA, or the Software Purchase Assistance program. This is associated with a bank product. So if somebody's doing bank products, last year we had the option for it if you're using Republic Bank. And now this year we added it for all of our banks. And so if you've already done the enrollment, then we may be past that opportunity this year, but keep in mind that if you want to do it in the future. So the way that works is if you're doing bank products and you have history of of doing bank products, and each one of the banks that we work with have little bit different criteria. Have a little bit different criteria. Um, but what happens is that you can request for the software purchase assistance, and then what will happen is that if you qualify, then what will happen is the bank will then give you a loan, and then they will pay us the amount of the software to pay for the software, and then we'll get payment on that, and you're good to go, and you're ready to go right when we're open for a business, and when the IRS opens up. And then as you do bank products, then the bank will then, out of your prep fees that you collect through the bank product, the bank will then collect will basically repay that loan for the purchase of the software. So it's just available. If you want details on that, talk to one of our salespeople, and they can probably give you some of the criteria on that and whatnot. Keep in mind that if you are doing it, I know that that with Pathward, um, that has to be in on the initial enrollment process. So if you've already enrolled with Pathward, unfortunately, that's not an option now. But it may be something that you want to keep an eye on in the future. I know we have some people that get on a payment plan, and this is probably a good alternative to to being on a payment plan with us. So anyway, it is available. That's something that if you may be interested or not. We added in the billing program, we added an option to put in a payment date and a payment method. Um, Purely optional, where when you go in there, put in the billing, the program computes the bill, or you override the bill, and then you can put in how much they paid, and then you can put in how they paid and the date, so you've got record of that. And that'll also be on whether you're on the billing menu, where you can put that in, or also off of the summary menu, and I'll show it later when we get into it. There'll be an option if somebody pays later, and we have an option to go in with the F2 off of the pick list. You can hit the F2, and then it brings up a summary, and then you can put in whether a client paid, and then you'll be able to put in the payment date and the payment method in there as well. Okay, the next thing on our thing, one of the changes that we did was that we had increased the number of states that we show on the summary screen. We used to have a limit of 3 states. We bumped that up to 6. We still are going to keep a limit on that because of the room that we have on that. So I don't know how many people have more than 6 states. I don't know how many people have more than 3 states. Um, So that is something new that's going to be on the program, and that'll just automatically show up on there as you do more than the 3 states. Um, we reworked the input on the unemployment screen. So on the unemployment, a lot of times there'll just be unemployment. There's no withholding, and a lot of times there's no need to enter in all the information off of the 1099-G. And if that's the case, then what'll happen is when you first go into this menu, these options right here they'll be white or not grayed out. And you can just put in the amount of the unemployment and put the dollar amount in, and you're done. And it'll go onto the front page of the 1040, and it's taxable, and you're done. If there's withholding, then you really should go enter in the 1099-G. Now, all the detailed information on that 1099-G doesn't actually all of it doesn't, the IRS doesn't have a place for it. They do collect the employer ID number and the withholding amount. So if there's a withholding on there, it is a good idea to go ahead and add a unemployment record or a 1099-G record, and then you can put in the amount of the unemployment and the amount of the federal, and maybe if there's state withholding, the federal and state withholding on there. And what happens is that once you enter in one item for the taxpayer, then it no longer allows you to put this in. We had some issues where I don't know how common it would be that you'd get more than one unemployment record for the taxpayer or for the spouse. But if you tried to mix the two of these together, then it caused some problems, and I think the program only picked up one of those on that. So we kind of cleaned that up so that you can't have it in both places where you're just putting in basically an override number, or if you're just putting in the detailed information by entering in a 1099-G for that. So that's a change that we made in the program. Um, Next thing, IRS made some changes on crypto. So I think we have a poll. I'm just curious to see how often we're seeing um, how often we're seeing cryptocurrency. I know it's getting more and more common. and how many people, how many of your clients, how often did you have to deal with that? So we have a poll that's coming up right now. So if you guys could answer that and then be
So I
curious
put
to
a
see.
cute picture in there. So if you can't see that, I was like, wait a minute, you might have to scroll down to the answers. I'm not exactly sure what it looks like for you, but anyway, so scroll down to put in your answer.
Are you advocating Bitcoin?
I, I, I who knows, you know? It's like, it's as a, it's not something I have studied or participated in personally. So that's just me.
Okay, so we want to do a little poll on this. So I'll move on. I think the poll will continue on. I think I can continue. There
I'll,
we go.
yeah, I'll give it. Do you want to, see the results right now, Mike, or wait a little bit longer?
We can wait. We can wait a minute.
Okay, well, I feel like but it hasn't changed. If everybody's participated
Okay.
at this point, I'll end it and we'll share the results.
Well, let's see. Oh, 1 out of 10 clients. That's quite a bit. Um, that seems to be like half the people that 1 out of 10 people are have something to do with crypto on there. Yeah, it's getting more and more common that we're dealing with it, and there's still a handful of unknowns on that or different questions on that. One of the things that so in the program, well, actually not in the program, with the IRS, this wording right here, this section right here, digital assets, that says at any time, that's the new question that they have on the 1040. I can't remember if this is the one they had this year. They used to have the question used to be it was very vague, and did you have any cryptocurrency or any digital assets? And so it wasn't clear as to whether or not you should be checking that box or whatnot. So now they kind of clarified that. So it's basically, did you receive any money or is any rewards or payments or services, or did you sell or exchange or dispose of any assets? Then you check yes. So if somebody just bought something and they're sitting on it and they haven't sold it, then the answer to that question is no. But if they did receive some rewards, or if they sold or transferred or did any type of exchange with the crypto or digital assets, then the answer is going to be yes. So the question for that, and the IRS has moved that question around. I think it used to be on the Schedule D, and then they moved it over to the Schedule 1. So, and now I think it's up on the front page. Um, so anyway, in the program, there's the basic information menu. So the basic information menu is the menu where you put in the name and address, filing status and whatnot. And then down, as you move down that basic information screen, there's a section that we have special filing categories and we have different information in there. But this is where we have the question here. Did you receive as a payment or sale exchange or dispose of digital assets? So you check the box yes. If you don't check it, then it's a no. It defaults to no. Um, so that a little bit changed there. Um, then they added a new line on the Schedule 1. So Schedule 1 is the catch-all other income type schedule. And they added a line on there for the digital assets received as ordinary income, not reported elsewhere. So when you've got the digital assets or the cryptocurrency, a lot of times if you're buying and selling, then those transactions are going to go over on the Schedule D, just like they would like a stock transaction. But if you're receiving some sort of rewards or staking rewards, um, then those are reported as ordinary income. And it used to be that you just put them on other income and you type in a description in there. Now the IRS has a new line um, for digital assets received as ordinary income. So anyway, that's a new line on there. So if somebody has their staking rewards or they got some sort of rewards through through the digital assets, then you'll go into the Schedule 1 and there's a line for it. Um, this no question right here, if the you makes more sense if there's it doesn't say yes or no if you had it. That yes or no is whether or not it's considered earned income. And that has to do with when you've got earned income coming off of maybe a 1099 that's subject to SE tax. So that's what those no's are. So that's never going to change. That's just those are set that it's not a earned considered earned income. Um, okay, another thing that we added this year, it's not really a new thing with the IRS, but we didn't have it. So we added this. That's the Pub 536 worksheet. So the Pub 536 worksheet has to do with the mortgage interest. So if you're doing a Schedule A, the client has mortgage interest, and you're going to take a deduction for the mortgage interest. We added this worksheet. So you'll go into it here by clicking the box here. So what you'll do is you'll go ahead and put in, and I just put in a whole bunch of them on here. I don't know if that's, I mean, I rarely have somebody that has three different 1098s along with home equity mortgage interest and whatnot, but I just filled it up doing this. Um, so you'll take the number off of the 1098 or the interest statement here. And while I'm here, let's talk a minute about this. Well, I'll talk about it in a minute. So if you go into the worksheet, then we're going to go, here's the worksheet, here's the input for the worksheet. So what you're going to report is you have to, and this is going to come into play if the outstanding loan balance exceeds $750,000. So if you have a client, so if your client has a house and the mortgage, the outstanding loan mortgage is over $750,000, then they may be limited on how much they can take as a deduction. And that's what this worksheet does. So there's three different inputs that you'll need to get, and this is additional information, and it may or may not be on the on that 1098. So unfortunately, it may require you to dig a little bit more. Um, but you're going to put in the average balance of their loans. So this first one here is that it's debt that was, the loan was started prior to October 13th, 1987. If that's the case, then it's not limited. I don't know how many of those loans are left around, so there's probably not going to be too many of those, but that's not limited. Then if they started their loan from October 12th of 87 up through 12/16 of 2017, then that one has $1 million limit. So you can only deduct the interest on the $1 million. So if it's more than $1 million, then they're going to be limited. And then the last one is probably going to be the most common one, is the debt acquisition incurred after 12/15, and that's the one that has a $750,000 limit. So if you're under $750,000, you don't need to do the worksheet. You take the deduction in full and and whatnot. If it's more than that, then you'll put it in. So I put it in this one. I put them all in here and you could have a couple different loans, so you could have different categories in here, could have different amounts in these in all three of them. It's possible. And then the program will just show you what the loan limit amount is based on the input. And then it gives a breakdown. This is the calculation amount. And I probably did a bad example on here because it doesn't split it 50/50 between. So here's we split it between the two of these. Let me show you the next screen. I think that'll show it better. So here's the worksheet. It goes and we print the worksheet. So you've got the unlimited, you've got the $1 million stuff that's limited to a million, and then you've got the stuff that's limited to 700, or the mortgage that's limited to 750,000. What happens is the program will go, or the worksheet will go through, and it'll compute what the percentage is allowed, and then it'll apply that percentage to the total amount of the interest, which happens to be $10,000 that I entered in on the previous screen. And then, like I say, it's just kind of coincidence that half of it was entered in as mortgage interest that came from a 1098, and then the other half came from mortgage interest that was not on a 1098. Um, and just in case you're not familiar with it, the the IRS on this line 8A, mortgage interest reported to you on a 1098, that's an easy number that they can go ahead and compare with the 1098 that they receive to see what you're deducting. And if it doesn't match, then you get a then you get a notice from the IRS indicating that, maybe it doesn't match. So if you have interest, mortgage interest or qualified interest, interest that qualifies as mortgage interest on like a motorhome or something like that, or seller finance mortgage, I guess that's automatically going to be down in other. But like something that's not reported on a 1098, then you will want to put that in on the input. Let me just go back to our input screen. You'll want to put it down in here on this other mortgage interest down here, because the IRS is going to look for these. Any numbers that's up on this upper section is going to be that there's going to be a 1098 that matches, and the IRS is going to look to match that. Anyway, so what we do on the worksheet is we take all the interest, do the calculation, and then we allocate it back by percentage. How much was on this line for 8A and how much was on line 8C. And like I say, my bad example is that it happens to be 50-50, but that's only because my input, half of it was 5,000 was from 1098 and 5,000 was not. So just happens to be, but it's gonna split it up. If everything is in 1090, if everything is on one or two 1098s, then it's all gonna show up on the line 8A, or on this one, the line 8A. So anyway, that's the Pub 936 worksheet. So I think that more and more we're getting more and more loans that with the price of houses, more and more we may run into that. So we added that worksheet, so the program will do the worksheet and hopefully keep you out of trouble and make sure you're deducting only the amount that's available to them. Okay, the next thing we want to talk about is the clean vehicle credit. So the clean vehicle credit, most of this is not new from last year. This is all the same information, the same deductions from the year before that were available in 2023. Um, used to be that there was only a certain number of vehicles qualified, and then they'd cut it off, and so that's gone. Um, and then they changed. Anyway, here's the new rules on here. It's the same as last year. They have modified AGI limits. They also allow deduction for previously owned clean vehicle credit. So that one can be up to 4,000. The new one can be up to $7,500. And they have different modified AGI limitations, whether it's a new vehicle or it's a used vehicle. Now, the one thing that has changed is that in if you're claiming a deduction or the clean vehicle credit, is that you can either use the 2023 or the 2024 AGI in order to qualify for it. So if the if their AGI went up, but their AGI was within the range last year or in 2023, they'll still be able to qualify for it. And there's a whole bunch of other, I can't remember all the details on it, on which vehicles qualify. And I think so much has to be built inside the US in order to qualify and whatnot. But the easiest way is just, I mean, most of the time the client's going to come in and they're going to know because they got it from the dealer and they say, hey, I'm eligible for this amount of the credit. But to double check, you can go to this website right here, this fueleconomy.gov. And it is tax 23, but it's still the same. It's still the same list of vehicles, and it'll show which vehicles qualify, um, which vehicles qualify and which ones don't. Or actually, I think it just shows the ones that do. If it's not on the list, then it doesn't qualify for it. And it probably has to do with it not being enough of the production was done inside the US, or it doesn't meet certain criteria for the battery capacity or whatnot. A whole bunch of detailed information that's more than I want to worry about. So if you want to look up the vehicle, you just look up the vehicle. Um, let's do a poll. I'm just curious to see how many people that are how many phone calls people got, people asking about the electric car. And then there's a little bit more that we're going to talk about on that. There is an option in the vehicle that people had for 2024 that you could basically take the credit at the dealership if it was a qualifying dealership, and they could just take the $7,000 or whatever it was. They could take it off of the price of the car and use it towards a down payment or whatever that was. But you still have to qualify for it. Um, I know I had a couple calls of people that were calling to want to know, if they qualified and what vehicle, which is nice because I don't know how many times I'm sure that all of you have had the situation where a client comes in and they said, "Oh, I'm supposed to get this." And then you go, "Well, yeah, it's available, but you don't qualify because of income or whatnot." So it's always nice that they call to check ahead of time.
So you see those results there, Mike?
I do. So it looks like 61% of the people got at least 1 to 5 calls is the most common. And then 18% got no calls, which I don't know if that's good or not. It's nice to not get the calls, but not if there's going to be a problem later. Anyway, yeah, like I say, I had a handful of people call, so I'm wondering um, if that's going to be a thing. How often we're going to see these. So the next thing, there is the option that that you could transfer the credit to the dealer at the time of the purchase. So instead of you waiting or the client waiting until they file their tax return to then file the tax return and then get the credit, they would then transfer the credit to the dealer at the time of purchase. Now, something that they can do that, and it definitely works out because this credit is a non-refundable credit. So if for some reason the client had other credits or just didn't have very much tax, maybe their tax is only $300 or $500 or $1,000, whatever it is, but that credit was available up to 7,000. Then if they waited to do their tax return, then the only credit that they'd get is that $1,000 or whatever their tax is. In order to once they reduce their tax down to zero, then they lose the rest of it. But if they transferred it to an eligible dealer, then they could have got the full benefit of it, by reducing the car. Now there is a catch to that because now that you can't, if somebody didn't qualify because of AGI, then that is not an option for them to then go and say, "Oh, okay, well, I don't qualify for it because of AGI, so I can't get it on my tax return. So I'll just get it ahead of time. I'll get it at the dealership." And if we have any of those, they're going to be sad because this is similar to the 8962 in that if somebody bought a car and they transferred the credit to the dealership, then they still need to file an 8936 to reconcile that they qualified for it because of AGI. So even if they already got the credit, they still need to file the 8936. And I think no, and the IRS is I haven't seen it yet, but the IRS said that they should have a record of all the taxpayers that received the credit from the dealership. And and if you file the tax return and there is no 8936 on the tax return, then I think we're going to see the IRS rejects that say, "Up, you need to have an 8936 on this tax return because you need to reconcile the credit to show that they got it." And if they weren't entitled to it, if they weren't entitled to it, then they're going to have to pay it back. So it's going to be, again, similar to the conversations or the situation where we have people that filed at 8962 and they didn't qualify for as much as the premium tax credit as they got. Um, so that definitely is something that's going to come up, I think, this year. Um, so let's do another poll here, and this is how many rejects did you get for a dependent that was already claimed on another person's return? So you've got parents that are split up, or the dependents or the kids spend time at grandma or somebody else's place, and whoever files the tax return first seems to be gets first dibs on it, and then anybody else after that is has to file it, has to file by paper. So we have a new option. I don't know if it's a great option, but the IRS has given us a new option in this situation. Um, and we'll talk about that. So first of all, the IRS, so here's the error code that you should see. This is the new error code that comes up. And let's see, basically it says that, the dependent social security number has already been claimed as a dependent on a previously accepted return for the same tax period. So then they tell you to go to the identity fraud, scams, dependents for additional information. And in the past, you either said, well, I'm just going to forego the child tax credit and not going to claim him as a dependent, and I'm going to move on, and I file by electronically, and or you say nope, we're right, they're wrong, and your only other option was to file a paper tax return. So, like I say, they have a new option on here. I don't know if it's a great one, but if your client then either has the personal, if they already have the PIN, the IP PIN. So the IP PIN, just if you're not familiar with it, which you probably are, but IP PIN is the identity protection PIN. Used to be only if your account was flagged as having fraud activity, then they give you an IP PIN, then they IRS sends you a new number every year. They did open it up a couple years ago where you can opt into it. A couple years ago, if you opted into it, then you were stuck with it. You could never opt out of it. And then I think last year they added it so you could opt in or opt back out if you wanted to, and so on. So there's added some flexibility in there. Anyway, if you file a tax return, it comes back uh, rejected for this reject code 5070 IND 50701 because the dependent was on another person's return, then you can go and your client can go get a personal deduction, the IP PIN, which I think they have to register with the IRS, which they have to go through the whole ID me. And then once they do that, then they can get an IP PIN. And once they have the IP PIN, then you can resubmit that return with an IP PIN, and then the IRS will go ahead and accept that return. I think they'll probably still go through the same process they do when you file a paper return and they send out notices to people and you may have to prove it, but but at least it's a little bit of an option. Um, I don't know how hopefully that'll be a little bit better than it was before. Um, anyway, let's go back to our poll. Yeah, pretty common thing. So how many rejects did people get? People got 1 to 3, 53%. So it's not an uncommon thing where we get those rejects. And I've always thought that there should be, they used to have, the IRS used to have an option to mark the return as an imperfect return, but they never accommodated this situation on that imperfect return. It was a really weird, obscure situation where they would go ahead and accept the return, which I always thought, hey, you're going to get a paper return anyway. You might as well get electronically and just mark it saying that we know that this happened. But anyway, this is a little bit better. If people can get an IP pin, then we can go ahead and still e-file it and have it go through. Um, so the primary taxpayer is the one that needs to have the IP pin. If it's married filing joint return, the spouse does not have to have the IP pin. Only the taxpayer is required to have it. And then this will only be available for 2024 tax returns. So prior year returns, if you're doing a 22 or 23 tax return and you get this error that's duplicate dependent, you'll still have to file. You'll have to file it by paper in order to claim that refund.
Hey, Mike, I'm going to interrupt you for a second. There's a good
Yes,
question here, and I think you just answered it, but let me clarify. Is the IP pin for the taxpayer or the dependent that's being claimed?
it's for the taxpayer.
Okay, thank you.
Yeah, it's for the taxpayer. I think that they when we were at some seminars with the IRS and they were initially when they first talked about it and that was their plan of doing it. I think their reasoning on it, their thinking on it was that if somebody went through the work of getting the identity protection pin and that maybe that made them more valid. I mean, I don't know. We were at a meeting and I suggested that we have similar to the 8962 where you could file a PDF that has an explanation as to why or how, or you could plead your case right on the tax return, but they didn't think that was a good idea. So anyway, yeah, the IP pin. So like I say, I don't know if it's a great solution, but it's a start. But yeah, need it for the taxpayer. And not you don't need it for the kids or for the spouse on the return. Okay. Something else that they talked at the IRS is they upgraded or they improved this this message for the I mentioned the 8962 reject where somebody filed a tax return and the IRS says, "Oh, we need to have an 8962." And the reason why they do that is because somebody on the tax return received a premium tax credit. So it could be the taxpayer, it could be the spouse, it could be the dependent. So anyway, they added this description of the error message that has a lot more information on it. And in talking about that, they say, hey, you should have an 8962 with the return. And like I say, taxpayer or the spouse may not have, but if for some reason the spouse was claimed on somebody else got one of the kids got insurance through another spouse or something like that, then you would need to have a 8962 on that tax return to account for the premium tax credit that was received for either the taxpayer, the spouse, or one of the dependents. Um, they do have an option where you can attach a PDF, and in the program we have an option where you can go in and you can have basically type in the description, and then the program will create a PDF with the description that you put in there, and then it'll send it off. I think that your bet, I mean, I think on that when it comes to 8962, I think you dig hard before you go fill out that PDF because I think you're just kicking the problem down the road if you don't have the if you don't file the 8962 because the IRS is then going to send a notice back. Um, I had a client that he got a 1095A that had no dollar amounts on it. He got no premium tax credit and he got no insurance on there. He signed up for it and canceled it, but for some reason he got on the list. And I think I attached the 1095A with zeros on it and I typed in the description why we didn't need to file it. And he still got a notice a couple months later. And then we sent him the same information that I had within the tax return, and then it went away. So um, if I don't know that attaching a PDF with the explanation on not why you're not having the 8962, likely, at least in my experience, is it didn't solve the problem on why they still send a notice out. Okay. I mentioned that I was going to talk about the 1099K. I'm not going to spend a whole lot of time on it. It seems like 2 years ago, maybe it's even 3 years ago, there was the threats that anybody who transferred money through Venmo or PayPal or anything like that was going to get a 1099. And if you shared dinner with a friend, then you were going to get a 1099 for the 1099K. 1099K is going to be for the not for 1099Ks are put out by um, kind of the intermediary company, not necessarily the payer of things, but somebody that's that's handling the transactions in between Venmo, PayPal, eBay, handful of the things, and they're just passing on the information of money that flowed through them. And like I say, the last couple of years, we keep thinking that they lower the threshold, then last minute they up it, and then we just don't see too many 1099Ks. But anyway, we do have an input for the 1099K. 1099K is not something that actually the detailed information doesn't get transmitted to the IRS as far as all the information like it does like a W-2, all that information does get sent to them, or a 1099-R does get sent to them, but the 1099K doesn't. But what we've done is we have this notice that comes up, and then we have the gross transaction. And then we added this amount not taxable to the recipient. And so then we make an adjustment on the tax return to show that it comes in, and then we take it back out. So it's available here. Like I say, we keep thinking it's going to be a big thing and that you're going to have to deal with a lot of it. But last few years, it's been a non-issue. But we do have 1099K input, and it's possible that maybe this will be the year that we get the 1099Ks, and we have to, put them in and subtract them back out. But the program does have an option to do that to try and make that easier. Um, let's see the direct deposit information. They got rid of the U.S. savings bonds option for the U.S. savings bonds. They had that in there for several years. For several years, we actually didn't support it because nobody asked for it. And then maybe when the interest rates were so bad, 3, 4 years ago, then people were like, "Hey, I want to buy U.S. savings bonds with my refund," and so we added that, and now they just got rid of it. So if you wanted to buy U.S. savings bonds through your refund, unfortunately, you no longer can do that. So now there's just, if you do direct deposit on your refund, you can have it go to 3 different accounts. So that's something that's new. In case you're wondering where it went, IRS got rid of it. So, okay. So 1040X, 1040X electronically is not really new, but how many people are actually doing their the option of doing their 1040Xs electronically, or are you still doing them by paper? Okay, looks like most people are doing the 1040X electronically, which is I think is a good thing. A couple things about the 1040X. Still obvious. It's available now for any years that are available to be filed electronically. We can do the 1040X. What I think is kind of nice is that the 1040X, the whole tax return is filed. The new tax return is filed with the 1040X. The 1040X is kind of just an explanation of the new tax return. So the IRS, I know that when I'd file them by paper, you would have to attach all the forms that changed and you kind of back into it. But I definitely like the idea of saying here, they basically they get the whole tax return, and then they get the 1040X, which kind of shows an explanation on there. Um, you can do direct deposit, you can do direct debit. Um, initially there was some limitations on whether or not you could do, you could do direct deposit, and then you couldn't do. I think you could do direct debit, but you couldn't do direct deposit. And so anyway, they're all doing those. They're doing them all now. There is something that's kind of weird on the superseded return. Uh, if you filed, way back when you filed everything on paper, if you filed if you had a tax return, something came in and it changed, you would file a superseded tax return. So you'd redo a whole 1040 as long as you filed it before the due date of that tax return. So before April 15th, then you'd do a 1040, you'd write across the top of it superseded tax return, and then you'd send it in, and that was supposed to replace it. So they still have the identification of a superseded tax return, but it's actually part of a 1040X. So you either mark the box that it's a 1040X or it's a superseded. It's one or the other, but you're still going to file a 1040X form on a superseded tax return. And then what was really weird is that a couple of years ago when they were talking about it, the IRS said, well, actually, if we got it before the due date, we kind of treated it as a superseded tax return anyway. And if we got it after the due date, then it wasn't a superseded return. So I don't know why they even put the box on there, because they're going to kind of make their own determination of it. Um, so anyway, I did an amended return this year, and I was surprised at how quick it actually got processed. I think it's still kind of a manual process, but it was processed quite pretty quick. I thought it was going to be a couple months, but I think it was maybe 4 weeks where they where they process the amended tax return that I did electronically. So I think it probably is faster than filing by paper, and I think it's more thorough. So I definitely encourage you to do the 1040Xs electronically if you're not. There is one weird. I don't know. I think we had two or three of them that came up last year where there was a reject. If the return had a 2210, IRS has a reject this rule F1040X-039. And basically, what that reject says is that if the amount of the tax is less than the amount paid, then you should have a number on the refund line. What happens, or what can happen, is that the 2210, or the 1040X does not have a line or in a place to put in the 1040X. And what they say is they just say add it to the amount due. So the problem is that if you have a 2210 and the client already paid the tax that was on the tax return, so they paid the tax plus the penalty. Then when you file the amended return, it comes up with the new tax, and then they compare that to the amount that was paid with the tax return. So that was more than the new tax. So they think that there should be a refund on the return on the 1040X, and there's not, because the 2210 penalty is higher than the difference of that. Um, so we went back and forth with the IRS, trying to get direction on how to handle that. And they finally came back and said, oh, I see what's happening here. And they said, okay, well, we will program a bypass. So basically, a bypass, they would ignore this rule if the 2210 is attached, but they said it won't be until processing year 2026. So I don't know if that was a misprint when they say processing year 2026, but if processing year 2026 is a year from now. So if that comes up, then you have an option. Their recommendation is to file it by paper. The other possibility is you could take out the program. We allow the input for the 2210. I think I have it here. Yeah. We have input for the 2210, the penalty amount on the input screen, and you could take that out, and then it says they get a refund, and then I think the IRS is probably going to make an adjustment, and then they send them a bill. So unfortunately, that's kind of a little up in the air thing right now. And it's up to you, the preparer, to decide how you want to deal with that situation. Um, So really quick overview on the 1040X if you haven't done them before in the program. Basically, you ideally before you make the changes on the tax return, you say, "Oh, I know I'm going to have to amend this tax return." So you go into the 1040X and you tell the program to carry the current numbers into this first column, which is the original tax return. Then you go make the changes to the tax return, and then you come back in here and then you carry the new numbers, and then it'll carry the new numbers, makes the changes. Here's my bad example of no change, but anyway, you would see the changes if the income tax was higher. And then and then as you scroll down on this page, which I don't have a picture of it, you would type in the explanation of the changes. And then to e-file it, then you just go back into e-file and you basically retransmit the tax return. And if it's if as long as this box right here is checked, either the 1040X box or the superseded box is checked, then you can retransmit the return and the IRS will accept it and they won't treat it as a duplicate return. But if you try to just send the 1040X return again, it'll come back duplicate um, if it's already been accepted. Okay, the next this isn't new, but I love it, so I wanted to show it again. The This is the screen where you finally go, okay, I'm going to transmit the tax return, and then it'll go and say, okay, are you ready to go? You say yes, and then it'll go ahead and it comes up with this menu right here, and I think it's great because I used to spend a little bit of time going around looking, double checking my direct deposit information, double checking everything on that because maybe if I did the return and then they mailed me back the 8879, I always like to go back into the return. I look it over, I double check everything. So this is a chance where you can go look at it and you go, okay, yep, that's my refund, and I'm going to do direct deposit, and yep, I'm going to the bank account. If you're doing bank products, then pay attention to this section right here to know whether or not it's designated as a bank product or not. We get a handful of calls every year where people their intention was to do a bank product, but for some reason, if they didn't go in and actually fill out the whole bank application, or if there was something that was missing or not complete, we try to catch that to say, oh, you started it, but you didn't finish it. So either go get rid of the bank product or finish it, resolve any issues. But anyway, but the once tax returns have been transmitted to the IRS, there's no redos on that. There's no way to, and the way the bank products works is that instead of routing the money to the client's bank account, it routes to the bank that you're set up to do the bank products with, and then the bank will get the money under their account number, and then they will go ahead and process it based on whatever's in the bank application and collect fees and all the rest of it. So anyway, this little eFile transmission confirmation page that shows which states or state shows whether the state's going to be transmitted or not, shows whether or not there's a direct deposit, direct debit, and whatnot. So um, great, something to pay attention to. I know sometimes we get in the habit of just like boop, boop, yes, 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 and whatnot, but I think this is one that you slow down on and you look at it before you go ahead and send and move on to the transmit now. Okay, so that is pretty much new stuff in the program, new changes, um, and whatnot. The next part of it, we're just going to go through and look at doing a tax return. I'm going to just share some opinions of mine on on the flow of things. Um, so on doing a tax return, we move on. So this is the main menu where you're starting a return. We have the option of new client, prior recall client, or recall prior. So new client, you've never seen this client before, not this year, not last year, new client. Recall client here is that you're going to recall a tax return that you've already started this year. And then the recall prior is that I had this client last year and now I'm ready to do their tax return for the new year. That's the recall prior. We have modified this recall client button that will do everything. So in a way, I hardly ever use this new client button, and I hardly ever use the recall prior button. I usually go into the recall client, and I'll show you why. So what happens is you go to the recall client, and in here you can tell it to show me just the current clients, or I can show the prior clients, or I can show all clients. So sure, current clients will only show me the clients that I've started this year. Um, the prior clients will show me the ones that I did last year, but I haven't started this year. Um, and then the all will show them all. And I probably should have gotten, I don't think I have. No, I don't. They will be if you say all, the ones that are prior will be kind of a light gray. You can still select them, but they'll be in a light gray. And so what's nice about that is sometimes if you go, I can't remember if I started this guy or not. Well, if you use the recall client and then you go in here and you say all, then it'll just show all your clients. And if you've already started them, they'll be in a bright white. Of course, if they've been transmitted and accepted, they'll be green, or red if they were rejected, or yellow if they're waiting for acknowledgement or whatnot. If they haven't been started for the new year, they'll be a light gray, and then the ones that are current will be kind of this bright white. So anyway, you can do everything off of this menu, but and you can say, oh, well, they're not on the list because I've never done them before. You can hit new client right here, and it'll create a new client. Otherwise, you can select all prior and all. So anyway, I like to use this menu here. Um, the basic information, straightforward: name, address, city, state, zip. The dependent information, I think that's pretty straightforward. On this basic information menu, you have the option to navigate um, to go either the 1040 line input or the forms and schedules. We're going to talk about that in a minute. You can go if it's a client that you're going to, like if your client you did the return, they send the 8879, and now you just want to transmit it. And so you want to transmit it from within the tax return after you just review it real quick. You can just jump in here, hit the summary. It'll take you to the summary menu, and then you can go right to the transmit. And then exit if you just, oh, I'm done. I didn't mean to come into this client. I'm going to exit out. So these are their navigation here. This is off of the basic information menu. Um, So here's the line input. Um, we either have the line input, which has basically kind of a recreation of the 1040 return with income and tip and wages and so on down the line. Or we have the forms and schedules. Forms and schedules just has, oh, I'm going to go do a W-2. Oh, I'm going to do a Schedule A. I'm going to do a Schedule B. So we have a poll. Curious to see what the preference is for those people on whether or not you use the line input or the forms and schedules. And if you were on the meeting earlier today um, with Luis, he talked about how the line input, once the first time in the program, when you first go into it, if you pick line input, it'll say, oh, what do you want for the default? So if I pick forms and schedules as the default, then whenever I'm on the basic information menu and I hit 99 to go to the next menu, it's going to always take me to the forms and schedules menu. Or I can set up the default to be the line input. And you can change that in the default section. You can change you can change that in the default section on what your preference is and what you want the program to ask you for. Um, I normally I'm looking at the poll and and I'm kind of surprised that the forms and schedules is beating out the line input, but though that's what I use mostly is the forms and schedules. Um, but I do, and actually maybe that's not usually a mix of both is probably, and that's where I'm at too, because um, a lot of times, sometimes it's easier to find things off the line input menu. Sometimes it's easier to find things off of the forms and schedules menu. So, and you can switch back and forth, definitely switch back and forth. There's no problem. once you commit with one on a tax return, doesn't mean you're committed to either one of them. So they're just different ways to get at the different input sections of the program, and to change those back and forth is that when you're on the line input menu, which is right here, you can click a button to go to forms and schedules. Same thing on the forms and schedules button. There's a click a button to go to the line input. So anyway, yeah, definitely use them both. Definitely use them both, but it looks like everybody's kind of about what I'm at, where my first choice is the forms and schedules, but I definitely do go jump into the line input a fair amount of times. Um, okay. The input here, W-2s, we got W-2s, 1099-Rs, W-2Gs, and the 1099 miscellaneous. Okay. I will tell you that the W-2s, the 1099-Rs, and the W-2Gs, they all, whatever you input on these, on the W-2 or the 1099-R or everything, all that detailed information gets transmitted with the tax return. The 1099 miscellaneous, 1099 NEC, and the 1099K is a tool to gather information and it will carry to different parts of the tax return. But but it will not, the IRS doesn't have a section, they don't have a record where they say, oh, we want to see the 1099 miscellaneous record or the 1099 NEC record. They don't have it. So there's no requirement for you to go fill out the 1099K or the 1099 miscellaneous and that section of it. If you have a total of income and you've got a client that has, 3 or 4 1099s, um, and you just add them up and carry that number over straight to the Schedule C, the IRS is going to get the same information as it would if you filled out this 1099 miscellaneous or whatever, and then routed all those 1099s over to the Schedule C. So it is sometimes it's nice to gather that information and to keep it. So you've got it from year to year. And similar to, I had mentioned it on the 1099G for the unemployment. If you do have withholding, then it will, when it transmits to the IRS, it will say you had withholding from this uh, employer ID number. So it'll have the employer ID number associated with the withholding. So if the IRS is going to do any matchups, so if you have withholding on it, it would be a good idea to fill out the 1099 miscellaneous or NEC or whatever if you have withholding on it. So so up to you whether or not you want to use the 1099 input section on those. Not a requirement with the as far as the IRS goes, IRS and e-file goes. Schedule A, Schedule A. I think I saw something. I was watching something in there. I don't know if it was accurate or not, but um, somebody was saying that 91% of tax returns don't have a Schedule A anymore because the standard deduction is so high. Um, maybe that it seems low. I mean, it seems like I have more clients that more than that do a Schedule A, but maybe the people that aren't itemizing and aren't going to prepare. So our numbers may be different than what the averages are out there. But anyway, we still have Schedule A. Fill out the itemized deductions. There's medical taxes. Um, Mortgage interest, we talked about that Pub 536 now, which is within the program. A couple things we do have, like we have this line here for the mortgage insurance premium. It's not a deductible item on the federal return, but it is still is on some states. So we left it in there to be able to carry to those states. I couldn't tell you which ones they are. Um, then I already talked about the difference between 1098 and the other mortgage. That's worthwhile. The 8283, you either have non-cash less than 500 or you have an 8283, one or the other. Let's see, do I have? Oh, I didn't have a picture of it, but down we do have still have the miscellaneous itemized deductions that are on the bottom of it. It's not a deductible item on the federal tax return, but some states do, like California still has it. So it may be that you fill out the whole miscellaneous itemized deductions, and you may have a benefit on the state return. I know that I occasionally I have some that we go through it and we add it in, and it may make a benefit on the state. Um, let's see, Schedule B. You're going to add transactions. Do I have? Schedule B, you're going to add transactions. And I like to take the time. I used to put all my Schedule B, I just used to put an override number on there. Somebody had, $50 or $100 worth of interest. I just go put it on the 1040 overrides as interest. But I stopped doing that because I like to have, I like to have the name of the bank and the interest amount, just so when I do the tax return a year from now and I'm gathering information, I say, oh, okay, well, what about interest from this bank or whatnot? It's still not going to, the Schedule B isn't required unless you have interest and dividends over $1,500. And so the detailed information may not get transmitted to the IRS, but that's something that I like to have the detailed information on it. Um, then the dividends, pretty straightforward on the dividends. You gather the information off of there. Let's see, Schedule D. Schedule D, there's the section up here, which are the transactions, which all of these transactions, if you add a transaction, then it's going to create an 8949 transaction. And so you may get four 8949s, depending on how many transactions you have and what the category of of the sorry, I'm jumping ahead because I'm wondering if I had more detailed information on that. Um, so the typically, if you have a brokerage statement and all the basis was reported to the IRS, and you could take those summary numbers and you can just put in the summary numbers right down here for the total of all short-term transactions, the sale price and the cost, and then program computes the the gain or loss, and the same thing for the all the long-term transactions, sale price and the cost. So that's if you have a brokerage statement and it shows on there that all the basis was reported to the IRS. If it's not report, if you have any of those where they don't have the basis was reported to the IRS, which the brokerage statement still may have what the cost is on certain things, but if it says that it wasn't reported to the IRS, then the IRS doesn't have wouldn't get the cost information. And on those, you should put them up into the 8949 and where you have the transaction down there. Also, if you have any transactions that have an adjustment to it, the most common one that I've seen is that where you have like a wash sale and it'll have the code W on there. And basically the loss is disallowed and gets pushed forward when you bought the new when you bought the new stock or security or whatever it is, so it carries over there. Then you would need to put in the transaction so you can report the adjustment with that adjustment code. So that's the common one on those. This menu also does scroll down. There's more information down here. And this is where, if you had the data from the prior year and you carried it over, then it would carry over any lost carryovers. But if it's a new client, then you would enter those in. But um, just know that there's several input screens. If you scroll down on the menu right here, this scroll bar will scroll down and you have options to get for the lost carryover amounts. And this would also show if you have amounts coming from a K1s and whatnot. um, this is kind of the catch-all, and I don't know if this really gets used that much. And this might be an area where we talked about switching back and forth between the line input and the forms and schedules. It used to be before the Schedule 1 and Schedule 2 got so uh, extensive, I should say. I don't know. They added a whole bunch of things to those, to the other income and other taxes amounts. But usually this other income adjustments and payments, which is if you're on the forms and schedules menu, it's number 84. And that we used to call this, basically if you don't have a form or schedule, this is probably where it's going to go. So you have things in here for like the educator expenses, you have the IRA contributions, alimony paid, and then you can also have the other income. If you go into other income, you type in the description and amount, and like, I think, well, so this question right here, I think it's still here. It's the same. It doesn't matter where you check it. I think we've left it in a couple places where you can check the question on there for the virtual currency. But this other income adjustments and payments is usually kind of a catch-all if you're looking for a place. The one thing that I don't know if we have it in other places is you can have this additional wages, but sometimes there's scholarship income, or there's the foreign employer compensation. I think those are the most common ones that I've seen where you have additional wages. And so this will go onto the wage line. But again, a lot of these things might be easier or just as good. This is probably a good time where you would go, oh, okay, well, let me go to the either the Schedule 1, or the Schedule 2 directly, or I can go to line input and go to it there. Um, um, Education credits, really no changes from last year to this year. 8863. You pick the person has to be on the tax return, so it's going to be their taxpayer or some of the dependents. You do need to fill out this 8863, which has the student information, which normally that's information that you get off of the 1098T for the school name and whatnot. And then there's a couple questions where you indicate whether or not they've received it over the last 4 years. And then there's a due diligence question that's additional for the education credits. Um, on the earned income credit, normally the program will just carry over when you're going through, and it'll come up and it'll say, "Hey, do you want to do?" It detects whether or not it thinks you're qualified for EIC. You say, "Yes, I want to do it." It carries in the dependent, um, and then you will need to go through this due diligence question. No, I don't have questions though. Anyway, the due diligence questions, and you'll go through the due diligence for each one of the clients. And I know we've had some people that say, "Oh, do I have to go through that for everybody?" And the answer is yes, you do. And I haven't heard of any electronic file or the due diligence audits in a while, but I know a few years ago we had some people that, I had heard about some due diligence audits that were pretty ugly, and that I think it's up to 500 and started out at 500. It might be up to close to $550 per incident. So if you don't go through the due diligence, then you could be, and I don't think that we even allow you to get the EIC or the child tax credit unless you fill out the due diligence questions. So we kind of force you to do that, um, and uh, and so it is worthwhile to go ahead and do those. We did add a couple little shortcuts in there, as that we have an option. You can choose to recall the due diligence information from the prior year for each one of the kids. You have to do it individually, but we don't want to have too many shortcuts on that, because then it defeats the whole purpose of doing the due diligence. You're not really doing the due diligence if we just automatically fill those things out. So um, we did have, I know that after we implemented a lot of these things, we did have a client or two that actually did get the due diligence audit, and they were able to produce the documents that the questions and the documents that we asked through the program, and that satisfied the IRS that the client, that the preparer had done their due diligence. So definitely think it's worthwhile to, and it's necessary to do it. Um, Next, when you're done, when we're almost done, we end up at the summary menu, and off of the summary menu, this is where we're gonna, you can look at the display summary, which is just a quick summary. I love the prior year compare because it'll give the 2 year comparison, and you know, easy way to go through the client, explain why the refund is not as high as it was the year before or why they owe and whatnot. Um, we added this has been around for at least a year, maybe two, but we're trying to improve this calculation log. Sometimes it's not uncommon that where we get a call where somebody comes up and says, "Hey, it's not computing this for me." And we go through and we dig into it and we go, "Oh, well, they didn't qualify for it," you know, or you put in an override or something like that. So what we did is hopefully this, if there's something that's not coming up, you're not getting EIC and you think you should, um, or there's something, it's worthwhile to check this calculation log. You click on it and it'll say that, oh, we tried to get you the EIC, but you don't qualify because the investment income is too high or something like that. But that's what this calculation log would be things that the program tried to compute, but they don't qualify for some reason, or like, oh, you've put in an override. That's why it's coming up with the number that you have there because we do have some overrides in there. So definitely worthwhile looking at that. Um, you've got the print return. You can preview the return. Um, if you want to look at an individual form, you can do that. Here's the archive return to a PDF. This is where you set up your print setups. Um, Multiple states, you just keep adding states down here. You have the primary state. It doesn't really matter. We have it listed as primary state and secondary states, but there is no priority. It doesn't matter whether or not, if the client lives in California and then they have to do a non-resident in Arizona, it doesn't matter whether you have Arizona as the primary state or California. It doesn't really have any priority. Once you get into the state, you indicate whether or not they're resident, non-resident, part resident, stuff like that. Um, so there really is no priority here between primary state and secondary state. We have the direct deposit information, electronic payment. Um, Electronic payment, I'm sold on it. I try to set people up on electronic payment more and more. Less people want to write checks, so we'll do electronic payment. And I have not had problems with it. This is where you set up your billing. When you're ready to e-file, um, you go for the e-file information here. Um, there's that 1040X that I was telling you, but we talked about earlier. Um, Couple things. There's this create presentation in TaxCom. We do have TaxCom, which is an add-on program to be able to communicate with your clients by sending them messages, or you can have video conferences, or you can send them returns. Um, for anybody, then it seems like I do more and more. Even people that are somewhat local, they just decide they don't want to come in, so they send me the information. I can use Taxcom for them to transmit documents to me securely, and then once I'm done, this presentation right here does this great presentation that shows the 2 year comparison. They get to review it. They say, yes, it's fine. If it's fine, then they say, yeah, I want to sign it. They go in there, they can sign the documents. Um, and then also they can scroll down and it'll show the whole return as a PDF, and they can download the PDF right off of that screen. So we're, if you're using the this Taxcom presentation, I love to send that to the people that are not local because I can, send that to them and I feel good about them being able to review that before they're signing the tax return. Let me see. Okay, so this is the summary reports. That's there's just the basic summary, shows the list of forms and the the information on the return. And then I talked about the state here. You can add states. One thing on the states, when you go into the state, first time you go into a state, it's going to automatically carry anything over. Next time you go in, it's going to ask a question: do you want to carry, not carry, or zero out and carry? So what that means is that if it's going to if you hit carry, it's going to recarry anything that would normally carry over. Which, if you've made adjustments on the state return, it may trump on top of those adjustments. So be aware that what that carry is going to do. Sometimes you have to because you made a change. You made a change on the federal side that needs to be affected in the state return, whichever state. So you want to carry. Other times, if you're just going back in there to put in the direct deposit information, then you can say, "Oh, don't carry. I don't, just in case I had any changes or adjustments." If for some reason you're in the state return and like maybe a non-resident and you're like, oh, everything's all fouled up as far as what is non-cal, want, part year state or not year, whatever, and you just go, oh, let me just zero out and recarry. So it kind of refreshes that state. It's kind of a restart on that state return. So that's what those options are. um, we do have the option for the e-signature. This e-signature right here to electronically sign, that's if you've got a client sitting in front of you. That's if you've got a client sitting in front of you and you prepared the tax return, you review it with them, and then you say, okay, just sign right here, and then you hand them the signature pad, and then they can go ahead and sign the return, and it'll put that signature on the 8879, and then it'll display that 8879. But you are responsible to go ahead and save that PDF because that PDF is the only thing that's going to have that signature on it. We don't save the signature with the tax return data. So if you reprint the 8879, it's not going to have the 88, it's not going to have the signature on it. So we need to make sure that the signature, they're signing the 8879 that you're presenting to them. And if we just reprinted the 8879 after changes were done on the tax return and we just reprinted the signature, then it kind of takes away from the validity or the purpose of even signing. So make sure if you're using the signatures. So we have the Topaz signature pad is what we typically have used, but we also have the ability for if you have a mouse pad, there's an option in the defaults and settings where you can say use the a mouse pad or the mouse. So if you have a little pad, you can use that, and you don't have to have the Topaz signature pad. It'll go ahead and gather the signature from a just a mouse pad. Like if you have one on your like the laptop, you can do it. So there's an option in the defaults and settings whether or not you want to use the Topaz signature pad or just the mouse pad or the mouse. Um, this e-file information menu is where you're going to print the 8879. If you're doing a bank product, this is where you go into the bank application menu here. We have for the taxpayer PIN, which is a 5-digit number. When we file electronically, we use the preparer pin method, I think is what they call it. So the preparer is the one that enters in this pin. The other thing, if people are filing tax returns online through like TurboTax or something like that, then they use what's called a self-select pin. The self-select pin, you have to have the shared secret, which is the prior year AGI. But when you're using the practitioner pin method, which is what we use, then you don't need that prior year information on that. Actually had one or two somebody I did the tax return for the parents and the kids are like, oh, we can't file it because we can't file the return because we don't know what the prior year thing is. And so finally, I actually picked up a tax return because they wanted to file electronically and they didn't know what the prior year number was. So, and, and because we use the practitioner pin, we don't need to know what it is because we entered in and we collect, but we do have to collect the 8879 and keep it on file. Um, 8453 attachments, I think that's kind of obsolete. There is an option to mail in. That used to be that you'd have the 8453, which was used to be the old signature form, and then you'd staple things to that attachment. If I don't have the menu on here, but if you scroll down, there is an option to attach a PDF, so you can attach PDFs to the tax return. So I think that that's kind of replaced the 8453 attachments. Um, and that is about it. So that's what we wanted to cover today. Um, we're looking forward to a good year. Like I say, we didn't have a whole lot of changes this year, and so we're hoping that the IRS does not going to have anything. We did get, I think it was a week ago, we got a notification from the IRS asking for if we wanted to be involved in the controlled launch, which the controlled launch is where they allow us to transmit returns, usually about a week early, maybe a week and a half early. But it is kind of in a testing stage, so they limit the number of returns that we can send. But the number of returns is still a pretty substantial number of returns that we can send, and our time frames on when we can send them. But anyway, I took that as a good as an encouraging note to think that the IRS um, is is that we're not going to have it too many, not going to have any holdups or hangups. Obviously, the IRS will not tell us when the e-file start date is. Um, it's usually somewhere around the mid, maybe the third week of January, but we never know. Sometimes it goes until February, but they keep that a secret. They do not, they do not let that out. Anyway, we're looking forward to a good year. This last menu that I've got here on the screen is the just if remind you to go to our website for the live training webinars and whatnot. But I think that's what we wanted to cover. So thank you very much for attending.
Thank you, Mike. Appreciate all of your knowledge and wisdom and experience and sharing that with all of us. This has been a great training. So thank you. Um, Let's see. I just wanted to share there's one more session for today. It's at 1:30 p.m. Pacific time. Republic will be joining us and sharing about their program, their bank program. So if you don't use them and and you always kind of wondered what was different, what's different between the banks and what have you, this is a really good kind of a small group opportunity to to speak with or really ask your questions of Republic or listen to what they have to share. So we would love to see you then, 1:30 p.m. Pacific time. And I think that's it. Thank you, Mike. Thank you everybody for joining us, and we'll see you again. Bye-bye.